TFSA contributions for 2023 was $6,500, but the contribution limit for 2024 has been increased to Taxes are a big deal in Canada, a really big deal. But despite how overwhelming taxes have been lately, especially with rising inflation and rising interest rates that we have seen in 2023, there's some big changes coming to Canadian taxes in 2024 that will affect every Canadian resident. And you may even get to pay less taxes. Who knows? In today's video, I'll break down the important tax changes in Canada for 2024 that you need to know. I'll talk about the exciting new limits for the TFSA and the RRSP, as well as big changes coming to the CPP, which is the Canadian Pension Plan. There has also been updates to our tax brackets and tax credits, and I'll be illustrating that with some examples. We've got a lot to cover, so let's jump in, starting with the first great news. TFSA contributions for 2023 was $6,500, but the contribution limit for 2024 has been increased to $7,000. Yeah, this is the first time we've seen a TFSA increase 2 years in a row, and that's really amazing. So what this means is that for 2024, you get an extra $500 that you can contribute to your TFSA, and this gives you more opportunity to grow your savings and investments tax-free year after year. TFSA is one of the most powerful tools we have as Canadians to build long-term wealth. So please make sure you're taking advantage of this increased contribution room for your TFSA. You can put in the $7,000 on January 1st if you want, and you can also contribute it over the year. But if you don't use up the contribution room in 2024, you don't lose that contribution room because it is carried forward forever. And even if you don't have the cash to contribute to your TFSA right now, you can transfer over money or stocks or ETFs from your non-registered accounts into your TFSA. But note that you might have to pay some capital gains tax on that transfer. But don't lose sleep over that because it's just a one-time tax, and it will be nothing compared to a lifetime of tax-free growth that you get on your investments. Now, let's talk a bit more about TFSA for those who are not very familiar with it. Everyone in Canada gets the same TFSA room. Absolutely everyone. Your income does not matter, but your age does matter. So you get a contribution room for every year you have been resident in Canada since you turned 18 years old. If you were born in 1991 or earlier, meaning you will be 33 or older this year, you have a total of $95,000 of TFSA contribution room if you have never contributed before. You can put that in at once or at your own pace. If, on the other hand, you were born in 2006, meaning you're turning 18 in 2024, you will have only $7,000 worth of TFSA room because you just turned 18. Please note, and this is very, very important, you do not have to be a Canadian citizen or even a permanent resident to start a TFSA. You just need to be a Canadian resident, 18 years old, and have a valid social insurance number. The next big change coming in 2024 is in your RRSP or your Registered Retirement Savings Plan. Now for the RRSP, you also have increased contribution limits for 2024. The RRSP is a powerful investment tool to build your retirement fund and reduce your tax bill. But unlike a TFSA, your contribution room does depend on your income. Each year, your RRSP room will grow by 18% of your earned income for the previous year. Earned income includes things like your regular employment income from your job, plus your net business income and rental income if you are a landlord. But it does not include investment income like dividends or capital gains. But this 18% RRSP room is capped at an annual limit. And in 2023, this limit is $30,780. So if you have a salary of, say, $75,000 at your job, you will have 18% of that $75,000, which is $13,500 worth of RRSP room. So you can contribute the full 18%. But if you had a massive salary of, say, $180,000, you wouldn't get the full 18% of that in RRSP room. 18% of your income of $180,000 will be $32,400. But remember that you only get the capped contribution room of $30,780. So basically, you have an extra $1,620 that you lose in quotes, which sucks. But there is good news for high income earners in this category that are basically just tired of not being able to maximize the full 18% room of their income for their RRSP. In 2024, that annual limit has been increased to $31,560. So if you make over $170,000, you get to enjoy that extra RRSP room and reduce your taxes. There are a lot of rules when it comes to RRSP, but don't let that stop you. RRSP can actually be an absolute game changer if you know how to use it right. So at this point, I want to say congratulations to all you high earners for getting that extra RRSP room in 2024. Moving on. Now let's talk about those who are dying to buy or build their first homes in Canada. The FHSA, or the First Home Savings Account, was one of the best things that happened in 2023 for aspiring homeowners in Canada, if you ask me. It's a new account that was created to help Canadians buy or build their first homes. And it combines the best benefits of both the TFSA and the RRSP. For the First Home Savings Account, all the money you put into it is tax deductible, meaning that it lowers your tax bill, just like the RRSP. And your contributions can be invested and eventually withdrawn tax-free, just like the TFSA. This account is more than a game changer. So please take advantage of it. There's no changes for contributions to the First Home Savings Account in 2024. For 2024, you still get the same annual contribution limit of $8,000. But let me mention that you only start building that contribution room if you actually open an account. And this is where the FHSA is different from the TFSA. So make sure you open a First Home Savings Account before December 31st of any year, even if you don't put any money in it, because your unused room of $8,000 will be carried forward for you. And the next year, you have a total of $16,000 to contribute. Isn't that awesome? I think it is. But if you miss out opening your First Home Savings Account in any year, you will also miss out on the contribution room for that year as well. There are also big changes coming from the CPP, that is the Canada Pension Plan. The CPP is a retirement plan that all Canadians pay into, except you live in Quebec. And just like your taxes, the CPP is deducted out of your paycheck, and the amount that is deducted is actually increasing. So starting January 1st, the maximum CPP contributions will increase, and there will now be a secondary tier for high income earners. So let me explain with an example. Let's say you earn less than $66,000. Your CPP contributions won't change. You're going to pay the same amount as you did in 2023. But if you have a higher income above $73,200, you are going to have to pay an extra $300 in CPP in 2024. And that's an extra $12 deduction from every paycheck. So basically, if you make more than $73,200, you will contribute the maximum amount of CPP, which is $4,055. And even more importantly, if you're self-employed, running a business, you have to pay double. So you pay your portion as the employee, and you pay the employer's portion as well. Caput? More good news for 2024 is that the federal tax brackets have been adjusted. So everyone will pay a little less in federal taxes. Before I go further, let me explain about the Canada tax bracket. In Canada, we have tax brackets that start at the bottom and build on top of each other. So your first $55,000 of income is taxed at the lowest rate of 15%. Then your next $55,000 is taxed at the second bracket of 20.5%. And then the next bracket is 26%, and so on and so forth. So in this way, lower income earners pay less in taxes as a percentage than higher income earners. For 2024, however, tax rates are the same, but the brackets themselves have grown by 4.7%, which, if you're wondering, yes, is a good thing. Now, more of your income will fall in the lower tax bracket. And now your first $55,867 will be taxed at the lowest rate of 15%, unlike $55,000 in 2023. The second tax bracket of 20.5% has been increased by $5,000. So now any income above $55,000 but below $111,000 will be taxed at 20.5%. The third tax bracket has been increased by almost $8,000, and so on and so forth across the board. So all Canadians will actually see more money in the lower tax brackets. And so this means that you can expect a lower tax bill overall. But note that this is only for federal taxes, as each province also has their own provincial tax brackets, which is going to also affect your taxes. And I will explain later in the video with an example. But before we do that, note that a lot of tax credits are also getting a boost next year, specifically the basic personal tax amount. So for 2024, the basic personal tax amount will grow to $15,705. And what this means is that if you earn less than $15,700 a year, you will not pay a single dollar in federal taxes. If you're a student or even a part-time worker who is in that income bracket, you should be dancing by now. So you save 15% of $15,705, and that saves you $2,355 in federal taxes. And all Canadians benefit from this. If you compare this to 2023, you get to keep an extra $105 in your pocket. Thank you, Canada. However, if you earn more than $173,000, your tax credit gets clawed back as your income grows. But don't lose any sleep over that. Even if you're in the highest tax bracket, earning above $246,000, you will still receive the minimum tax credit of $14,156. But for the vast majority of Canadians who make less than $173,000, you get the full credit, saving you $2,355 in federal taxes. We will also see significant increase in 2024 in the lifetime capital gains exemption, which gets a big bump up to $1,016,836. This tax benefit isn't for most people, as it only applies to Canadians who own a small business corporation, a farm, or a fishing property and are selling their business. How does this work? I'm going to tell you. So let's say you own a corporation, and if you sold it for $1 million, you will be taxed on that $1 million in capital gains. It will cost you over $220,000 in capital gains taxes. Yeah. But with this exemption, you get to reduce your taxable gains by $1,016,000. And that effectively wipes away your entire tax bill. This is a huge benefit for starting a business in Canada. You can actually sell that business, and that sale could be extremely tax efficient. Now, before you run away and start making frantic preparations to sell your business, note that in reality, there's something called the alternative minimum tax, which targets extremely high income earners, so that you can't sell $1 million business and get away with zero taxes. So using the example we already used for the $1 million business, you would pay around $30,000 in taxes, which is still a great deal on $1 million sale. Or don't you think so? Okay. I know I threw a lot of numbers at you. Some things are going up and some things are actually going down. So what's the bottom line? Will you have more money in your pocket in 2024 or not? Let's go through an example to tie it all up. Now, let's say you earn $75,000 a year in 2023. Of that amount, $53,359 goes into the first tax bracket and is taxed at 15%, which is $8,003. The balance of $21,641 goes into the second tax bracket and is taxed at 20.5%, which is $4,436.40. Adding both of these together gives $12,439.40 in total taxes. Now, this is just the federal taxes. You also pay provincial taxes, and that depends on the province that you live in. Now, let's compare that to 2024 with the same salary of $75,000. In this case, the lowest tax bracket has grown to $55,867 in 2024. And that's a good thing because more of your income gets taxed in the lower tax bracket, meaning you pay taxes of 15% on $55,867, which is $8,380.05. So a smaller amount, now only $19,133, gets taxed in the higher brackets and 20.5%, and that bracket gives $3,922.26 in taxes. If you add both of that together, you are paying $12,302.31 in total taxes. So for the same salary, your taxes dropped by $137. But again, that is just the federal taxes. Now let's add the provincial taxes. Say, for example, you work in Ontario and you still earn $75,000. You will end up with about $90 in tax savings, even before adding the basic personal amount that reduces taxes for all Canadians. So yes, your taxes will likely go down in 2024, but CPP has gone up. Now let's also look at an example of that. Since our $75,000 income is above the CPP maximum pensionable earnings of $73,200, we will pay the max CPP amount, which has increased by $300. So in 2024, with an income of $75,000, you will pay $300 more in CPP. And at the end of the day, you can expect a slight increase in your take-home pay, especially if you have more tax credits and deductions. But I guess we'll wait to see the real numbers in January. I know taxes are not the most exciting subject, but it's so important to learn the rules so you can make the most of your money. So in summary, the TFSA contribution limit has increased to $7,000. The 18% annual limit for your RRSP is increasing as well, which is great news for high-income earners. Federal tax brackets have been adjusted, and the lifetime capital gains exemption gets a big bump up to $1,016,836. Awesome. Awesome news. Awesome news. If you like to learn about finances and what you can do to earn more next year, please like the video, subscribe, and turn on the notification bell. In this video, I also talked about the first home savings account, and this is one way that you can save for purchasing your first home in Canada. And you can get more details on that in this video right here. So thank you everyone for watching. I hope you gain value. Don't forget to like, share, and subscribe. And I'll see you in the next one. Bye, guys.